Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Monday, December 14th, 2020, and I am pre-recording this Trading Places Live for Tuesday, December 15th. Futures are relatively flat, a little mixed, up on the Dow a little bit, up on the S&P, down on the NASDAQ. And this comes a day after mostly selling on Monday. We saw pretty good action at the open. But then we did sell off throughout much of the day on Monday. We are about to wrap up the most bearish part of December. That will end tomorrow, December the 15th. And then the second half of December tends to be much stronger than the first half, at least on the S&P 500 dating back to 1950. That has been the tendency. So we'll see. The agenda for today, I'm going to go into the daily market recap. Then we'll do the regular talking technically. Going to take a look at some of the consumer areas of the market, some of the industry groups within both consumer discretionary and consumer staples. Taking a look just a few of those charts. I think some of them are setting up pretty nicely. Then we're going to get into chart breakouts, and I'll give you some I think look really interesting and certainly point to further strength ahead. Then we'll get into the earnings spotlight. Got a few companies coming up later this week. We'll take a look at the charts, maybe see if we can get some hints as to what we might expect out of those companies when they report. And then we'll wrap up the show with the 3 you must see. First, before we get into any of that, let me take you over to earningsbeats.com. We do have our Market Vision 2021 Rising Above. That will be this Saturday. So Saturday, December 19th from 9 a.m. to 2 p.m. Grayson Rose and David Keller from StockCharts will be joining me. I think it'll be a really interesting look, not only at what we think about the market going forward, but actually some of our products and services in the year ahead. I think that'll be a very interesting discussion. Looking down below a little bit, you can see we have a free Earnings Beats Digest newsletter. If you'd like to be a part, just put in your name, email address, hit that subscribe button. There's no credit card required. You can unsubscribe at any time. It is published 3 times a week, Mondays, Wednesdays, and Fridays, usually before the market opens. And it normally focuses on earnings, maybe sometimes relative strength, and sometimes key industry groups, whatever seems to be at that moment a key topic. And I do think that they're mostly educational. I look at them as being very educational, but also they provide some pretty good trading ideas as well from time to time. Over toward the right, you can see we do have a button there you can join. Love to have you join. Check out our service. And you can see our portfolios just continuing to perform extremely well, especially the model portfolio now, which continues to rise. It's up almost 14% this quarter. The S&P 500 is up less than 2%. Model portfolio just keeps distancing itself further and further away from the S&P 500. If you sign up, you can go through, check out our portfolios and see the stocks that we have in those various portfolios. All right, let's move on to the action from Monday. We got off to a really good start across all the major indices. The Dow and the S&P actually were leading the NASDAQ early on. It looked like it was going to be more of a rotation back toward value, and then things changed throughout the day. And the Dow sold off all day long. S&P 500, same thing. NASDAQ sold off a little bit after the open, but on a relative basis, it was an about face from the open to the close. The NASDAQ held up very well on a relative basis throughout the day. So the Dow finished down 185 points, the S&P down 16, the NASDAQ was up 62. Mid caps down about 6 points, small caps down 3.5 points. So on a relative basis, the Dow was actually hit the hardest, then the S&P 500, and the NASDAQ was your leader on Monday. 2 reasons: technology and discretionary. These were the only 2 sectors, only 2 out of 11 that were higher on Monday. Technology and discretionary were your 2, and that was the big reason why the NASDAQ outperformed. Energy, once again, it seems like it's either feast or famine. Unfortunately, we saw the losses on Monday for energy, down 3.5%. We were up above 42 just a couple of days ago. Now we're back down 39 and change on the XLE. Both technology and consumer discretionary higher. Technology higher by a little bit more than 1/3 of 1%. Discretionary higher by 0.15%. Autos strong day today. Tesla had a nice rebound. Autos overall up almost 4%. Aluminum going the other direction. Aluminum, the worst performing industry group the last 2 days, both Friday and Monday. So aluminum getting hit pretty hard, down almost 5% on Monday. And you can see that PPO rolling over as we were trying to make new highs. So let's watch that 20-day moving average. If that fails to hold, could be a big trip down to the 50. I suspect that first test of the 20-day will hold. But if you see a very weak attempt to get back up and break out with the PPO rolling over, that could lead to some additional consolidation, maybe even a little bit more selling. So watch that closely. 10-year Treasury yield. First, I will say that tomorrow, Tuesday, or today as you're listening to this, the December Empire State Manufacturing Index due out. The expectation is for 5.8. November was 6.3, so we're looking for a little bit of a pullback there. November industrial production in October was higher by 1.1%. We're looking for that to drop down to just 0.3%, so a little slowing there. And then November capacity utilization actually expected to increase a little bit. October was 72.8. We're looking for that to jump up to 73.0. So a little bit of mixed action or mixed economic reports expected on Tuesday. As far as the overall 10-year Treasury yield goes, you can see it did move up at the open. We're up about 3 basis points, gave it all back, came back down, closed almost uneven or almost at the even point, and just below the 20-day moving average. So it's starting to tell me we're going to consolidate here, more so than continue moving to the upside. We do have some bigger economic reports out toward the end of the week. I think retail sales is out on Wednesday. And then, of course, we've got initial jobless claims and housing starts, I believe, on Thursday. So, we'll see what the news is there. If we got strong news, maybe we see the yield spike. But I'm suspecting now that we are in a sideways range for now. 0.82 to the downside and maybe about 0.98 to the upside. And we're almost right in the middle of it after today's close. So I look for a little bit more sideways consolidation. Maybe we'll see that PPO return back to about the center line. Very similar to what we saw back at the end of September. You can see where we were drifting down, but we held prior lows and that PPO went to the center line. After this move to the upside, I think we could consolidate, see something similar here. That'll be something to continue to watch. Moving on, let's take a look at talking technically. And so I want to go through some of these consumer groups with you. First, toys. Notice the top in August and the top again in October and the equal lows. This is clearly rectangular sideways consolidation until Friday, where we made a slight breakout, and then we really confirmed it with volume picking up today. So I think toys now, look at the PPO, very strong. We're trending up above the 20, which is now crossed above the 50. I think toys looks really good and poised for a continuing rebound. Let's take a look at the broadline retail group. I think this is another group that is at least in a bullish pattern. We have not seen a breakout yet, but off of this advance all the way to the September high, you can see these highs getting lower and the lows getting higher, and we're squeezing. I think we're going to get a breakout, and I think it's coming fairly soon, probably before the end of the year. And I think we're going to make a run up to about 3,500, and that would bode well for a stock like Amazon. All right, recreational products. Now, I think this is another group. I think some have fallen asleep on the group because we've been sideways consolidating, but I don't see anything major to the downside. I don't see any breakdowns. In fact, I think we're going to make another run up here for this 520 level, possibly trying to break out above that. Peloton is one that I think is starting to gain some strength. It's got to get through this gap resistance area. You can see we had the sell off on big volume. I think we will eventually get through that level. Watch this rising 20-day. If we continue to strengthen, I want to see that 20 cross back up above the 50. And then any pullbacks, I want to see that rising 20-day hold. That would begin to tell me that we are trending to the upside. So that's something to watch as we close out 2020. Another group, and this is in the consumer staples area. So this is the distillers and vintners finally making the breakout. I mean, you can see the top here at about 480, just below. Here's a top in the 470s. And here we broke through 480 intraday and then kept coming up to about 480, pulled back. And now we've been holding above 480 and testing that 480 level right now. I think this is a key area right here. I believe we're going to bounce off of it. If we don't and we pull back, watch that recent low at 460, which would be the rising 50-day moving average. I don't believe we're going below that level, but I actually think we're going to bounce off of 480. I'm not sure we're going all the way back down to that 460 area. So this is a group that I think has been strengthening, and this is a test of the 20. And the way you could really confirm this uptrend would be holding this 20-day and breaking back out above 500. So look for that. And then the last one I wanted to show you here in this space is, again, this is in the consumer staples area. This is personal products. And personal products had the double top right at about 680, maybe just above 680. We went right through it the beginning of November, first half of November, up to about close to maybe 715. And now we're pulling back and consolidating and holding right above this key support area. I think 680 to 690 is your support level. The PPO is getting back close to the center line. I suspect we are going to see prices turn back to the upside along with the PPO. That's what I'd be looking for. All right, chart breakouts. I've got a few of these for you. Actually, I got several of them. And so we're going to go through these fairly quickly. First up is PayPal. There's a lot on this chart that I like. First of all, look at the AD line. Even before we could make this breakout, we were making the breakout on the AD line. And as we're making this breakout with increasing volume above all these prior highs, notice AD line also breaking to a new high. So I think we're getting confirmation. If I'm getting a breakout and I'm getting volume, that's generally enough for me. But I really like it when I get the confirmation on the AD line. So I think it's all looking pretty good there. When we look at it, PayPal relative to its peers, it's near 52-week high. Relative to the S&P 500, it's near 52-week high. The last move to the upside, you can see the volume coming in. I just think the stock continues to be accumulated, and I believe it's going to be a strong performer as we kick into 2021. The next one, VRNS. We had a big move up on VRNS about a month and a half ago. This was earnings related, huge volume, gapped up. We're up near 140, and then you can see that big black candle print. And when that happens, what that tells me, it just shouts it at me. Market makers are on the short side. When we get the big gap up, heavy volume, and everybody jumps in at the open, and you get a reversal like that, that's telling me that there's a lot of short selling that's taking place. And we saw VRNS go down for the next 3 days, got almost down to the 110 level, and now we've kind of stabilized and we're started to make this way back up. Notice the last pullback held above the 20 starting to rise. I think we got this breakout on Monday, and I think that's a really strong signal. If we do fail to hold this breakout, watch the 20-day. I think we will bounce off of that. So VRNS, I think, looks pretty bullish as we head forward. Moving to a biotech, Immunogen, IMGN. See the high all the way back here in February, which was just below the $7 level. And then we came up, tested about 6.5 or so. Well, we went through both of those levels and closed above 7. And look at the volume pickup. 6.9 million shares, almost 7 million shares. And looking back, that's the heaviest volume we've seen in a couple of months. So I think this breakout's for real. Again, when I see a breakout like this, even if it fails to hold that breakout, watch the rising 20-day. That, I think, is going to be the key as we go forward. And this is another one, AD line breaking out to support the price breakout. I like that. IAC, this is Interactive Corp. This is an internet stock. Lots of sideways action, not really doing a whole lot. And the group has been pretty strong. So, we had been downtrending here relative to the group until about a month ago. And now we're starting to move back to the upside. So we're starting to see some more leadership. And since this started, also, we've seen volume pick up just a little bit and a breakout. So IAC, I think, is looking very strong. I like these bounces off of the 20-day. See back in here where we just it's almost like the 20-day moving average isn't even there. We get almost no bounces. That's a sign of consolidation when your moving averages provide no support. When when you're looking back and you start seeing that rising 20-day offer support, then it starts telling you you're trending to the upside. So that's the difference between where we are now and where we were a few months ago. I think IAC looks pretty good here. XNCR. This is Zencor. Sideways consolidation the last few months. Big breakout. Look at the volume pickup. And on a relative strength basis, the stock is strengthening and about to break to a 52-week high versus the biotechs. And the biotechs are starting to strengthen again. We're getting close to about a 2-month high, relative high. So we are starting to see a little bit more action in the biotechs, and this is a stock that is showing some leadership. All right, SMED. Whoops, SMED, not X. All right, Sharps Compliance Corp. Top just below $9 in August, 8.5 to 8.75 in November, and then we finally make the breakout. Now, volume picked up, but it was only 362,000 shares on a $9 stock. So this is a much lighter volume, lower liquidity type stock than many of the others that I typically talk about. So I probably wouldn't trade this one personally because I just don't see enough volume and enough liquidity. But I did like the chart pattern. So I just wanted to kind of point out all this sideways consolidation and then finally getting this breakout. PCH. This is Potlatch PCH. Sideways consolidation. Lots of struggles at 47.5. Got the breakout. AD line looks good. Relative strength right here. It's in the real estate area. This is a stock that is breaking out relative to its real estate peers. The only negative thing I have to say about it, well, there's actually two things. Number one, it didn't finish on its high. It finished closer to its low. And the other thing was the volume. You know, if you're looking for a big breakout, I want to see volume confirm. And it was just an average volume day. So unless we get some confirming volume on Tuesday, we might see, you know, with that reversal and close near the low of the day, maybe we come back and test this rising 20-day one more time. But I do like the stock. I mean, again, when you look at the AD line, you look at the relative strength, this is a stock that has been performing pretty well relative to its peers. And it does seem to be getting some accumulation, or at least it's showing some accumulation. So this is one that I would expect to eventually move higher. The last one I have is another biotech. This is Sarepta Therapeutics. And I'm mentioning this one because of the false breakout. This one opened around 170, actually 171, went up to almost 180, 179, easily breaking above these highs back in June and July, and then came all the way back down and closed at 169. Don't like to see those false breakouts after this huge move to the upside. So I think in the short term, we've probably topped. That is a shooting star candle. I believe we'll probably move back down. I'd like the stock, though, if it gets back down into the low to mid 150s. So something to watch for. All right, let's move on to the earnings spotlight. Now, we've got a number of companies here that are going to be reporting later this week. And one that I think is going to be very interesting is going to be Lennar. And the reason I say that is the home builder group typically loves this. And I always say this, it's counterintuitive to what you would believe or think. But home builders tend to perform extremely well. Let me go over here and just show you. If we pull up the seasonality and we look at home builders and look at the winter months. Well, first of all, November usually gets us off to a good start. We average, over the last 20 years, we average going up 3.3% in the home building group during November, and 80% of the Novembers go higher. In December, 60% of Decembers go higher, and we average going up 3.2%. And then 70% of Decembers go higher, averaging 4%. So if you look at this, home builders between November, December, and January, if we add these numbers up, that's 3.3, 6.5, that's 10.5% that home builders have averaged going up from November through January over the last 20 years. 10.5%. Now, if you go back, if you go and look at all the other months and add them up, I'll try to do this in my head somewhat quickly. It's -3, 3.8, 3.2, 1.7, 2.3, 3.4, 2.0, 2.6. So the other 9 months, if we add this across, is 2.6%. These 3 months are 10.5%. And as I was mentioning, Lennar reports coming up. I think it might be Wednesday. It's either Wednesday or Thursday. I'm pretty sure it's Wednesday, though. You can double check me on that. But this is a company that has been struggling relative to its peers. It set its high on a relative basis back in July. The group kept going higher, and Lennar just kind of tailed off and went sideways here. So right in through this area, you can see it lost some relative strength, and then it's just been going sideways. The group could use a lift, and Lennar is one of those bigger, more recognizable names in the space. So I think the company is going to have a decent report. I just don't know what kind of reaction we're going to get. But keep in mind that from a seasonal perspective, this is a good time of the year. Now, the other thing I'll mention or pull up, because I didn't look at it, was to see the seasonal performance of Lennar. And actually December, 5.3 average over the last 20 years and 4.9 in January. So just December and January averages over 10%. And so let's go back and look at that chart and what's been happening in December so far. We've been going down. I mean, tried to come back up here the last couple of days. Pretty good volume actually today, and the stock was up 2.6%. So maybe the numbers are going to come through. Maybe this will be the jump start that Lennar and some of the home builders need. But they do need a lift. They need a catalyst, and Lennar is in a position to give them one. All right, next up, TTC. This is the Toro company. False breakout. You can see little cup, maybe off of an uptrend, holding the 20-day. So that's all looking pretty good. Relative strength, yeah, it's okay. I wouldn't exactly, be jumping up and down based on its relative strength. It's actually set its high all the way back in March, and it's been downtrending ever since. Put in a new 52-week relative low in the month of November, starting to try to bounce off of that. So we got some mixed signals here on the stock. The group has been very strong. Look at the relative strength here of its industry group. Very strong. That's what's helping the stock. The stock itself is not one of the leaders in its space, but the group is very strong, and that's been carrying the stock to the upside. Rising tide lifts all boats. Here's a visual of that saying. Accenture, ACN will be reporting. I think they report on Thursday. I think Lennar and Toro report Wednesday, and then these next 5 that I'm going to give you report on Thursday. So ACN, let's see here. AD line looks pretty good. Action breaking out again above that early September high looks pretty good. Yeah, relative strength again. If we can get above that September high, that would take us up to about a 10-month relative high, 9 or 10 month. But we've still got to do it. We got to see that first. So ACN, a little bit iffy going into its earnings. One stock I do like is FedEx. FedEx did break out to a new high. You can see on a relative basis, really over the last 4 months, this has been one of the strongest stocks in the delivery area. So I think they're going to come out with good numbers. We'll see whether or not Wall Street already has it built in. But because we have had a huge move over really all the way since the March low, but these last few months it's been a leader. So maybe it's already built in. I think worst case scenario is we see sideways consolidation. 260 probably holds a support for any weakness after earnings to the downside. But I'm actually looking for a breakout. I think we'll see a breakout. GIS, this is General Mills. General Mills, I am not expecting a whole lot here. It has been rolling over, turning down. And look at the stock relative to its peers. It has continually been going down. It just set a new 9-month relative low. Look at it versus the S&P. Look at its peers relative to the S&P. Everything's going lower here. So Wall Street's not really expecting anything big out of it. So I'm not either. I think they might beat their numbers. I just don't know that they're going to have anything exciting to say as we move forward based on what I'm seeing here on the chart. All right, Jabil Circuits. Well, it used to be Jabil Circuits. Now it's just Jabil Inc., I think. AD line's been trending lower for a long time, even though price action's been going up. So that's at least a little bit of a warning sign. The overall group, its peer group's been going up, it's been trending higher relative to the S&P, but Jabio has actually been one of the laggards in its space. And as it's been moving up, I really don't like the volume. Volume's been light. I think there's some warning signs here. I wouldn't be surprised maybe if we have a trip back down to 36, 37 with earnings. I don't know. It just doesn't seem to be setting up the way I'd like to see. And then finally, BlackBerry BB, big breakout here in December, huge move up. It's been consolidating. I can almost see here, lower highs, higher lows, squeezing into a triangle pattern. We'll see which way it breaks if, in fact, we get that breakout with earnings. On a relative basis, we've been seeing a lot of strength here over the past several weeks, past 4 weeks, relative to the telecom equipment companies. And the group has actually been strengthening a little bit over the last 6 weeks or so versus the S&P. So we are seeing some positive signs here, but this one has been a disappointment for a long time. And so I'm not quite sure I'd be overly optimistic as we go into its earnings report. All right, last thing I want to do, I'm going to bring up 3 Dow stocks. First one I'm interested in, the last 2 I am not. First one is Disney. And I've been talking about this one a little bit more recently. It already was starting to strengthen, but then came out and talked about its Disney Plus service. I think the number of subscribers way ahead of expectations, and they were going to raise the price. And as a result, stock took off. Now, we did see some selling on Monday, gave back some of those gains. I think we're going to hold the rising 20-day. I'd be surprised if Disney went back down and lost the 20-day. So any kind of weakness moving back down anywhere close to that 20-day moving average would start to look like a pretty solid buy for me. I like Disney. Relative to its peers, it did break just recently to about an 11-month relative high, almost 12 months, getting close to that high that we saw all the way back in December of 2019. So I think stock looks good. AD line broke to a new high. There's a lot of positives here with this stock. Now let's take a look at Johnson & Johnson, J&J. Now, when you look at it, you say, well, it's getting close to this breakout above the September high, above the April high. Well, first thing is, let's see the breakout, because we got close in September to taking out the April high, and you can see what happened. We struggled. Now we've come back up again, pulling back. Hopefully we hold this rising 20-day and go up and break out. But the problem I have with it is it is just consistently underperforming pharmas. And pharmas have been pretty bad relative to the S&P 500. So you got a bad group and you got a stock that's been downtrending versus that bad group. It's hard for me to get excited on a stock like this. At a minimum, I've got to see the breakout. I'm not going to trade a stock like this that's been underperforming in a poor group just as it hits overhead resistance. I think that is a mistake. Either wait on a further pullback or wait on a breakout, one or the other. And then the last one I have here is McDonald's. Yes, McDonald's had a good day today, going counter the market up 2%. That was nice. Failure at the 20-day, that could be a problem. Volume was heavier than usual. So that false breakout at the 20, a little bit more meaningful. Look at the stock relative to the restaurants. I mean, it's literally down near its 52-week low. I'd rather go somewhere else with restaurants rather than McDonald's. I would stay away from it. All right, that's it for me. Appreciate everyone tuning in, and I'll be back over at Earnings Beats on Wednesday morning for your next Trading Places Live. Have a great day, everybody. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.